And we are doing a follow-up video on Bitcoin and Ethereum itself, since we are in the weekend and we all are trying to get our plan together for next week and kind of see where we're going to end for this week. So let's just take a quick peek at naked charts and see what we can surmise from what the price action is telling us. On the weekly time frame, you can see that last week we had that nasty dip and we went into the previous order block of where we are actually trying to make a bull flag expanding wedge. If you can see the high here and the low here, it looks like an expanding wedge, and we are basically showing the bottom. And once the bottom is set, expanding wedge goes and breaks out to the top and goes to continuation. So the funny thing is, everything is looking perfect for that fractal to play out. Kind of similar like this. You're going sideways, you take the liquidity to the bottom, and then you just shoot out to the top. You basically are doing a very, very similar setup right now. The way that we will know if everything is good is basically not closing the weekly candle underneath that body of the last week doji, which was 58, 59K. As long as Bitcoin closes above 59K, the weekly candles are basically showing you continuation to the upside. Meaning next week we can go and grab as much liquidity from the upside as we can before a rollover, if a rollover is going to happen in a short squeeze fashion. If the short squeeze is not a temporary liquidity grab and it's the real move, we will impulse and we will stay up there, and any drop back retracement will be a less than 50% retracement, because we will be looking for continuation up while trapping any bears that were trying to short this area, using their blood as liquidity to rocket fuel us up into higher levels. So just be aware of that setup. It's taking forever, I know, but they're doing it. They're doing it. Here's the monthly on Bitcoin before we go to the lower time frames. You can see the same thing. We're just looking like we're doing a descending channel potential flag, and ironically, on this descending channel, the wicks are to the downside, meaning there are people actively trying to buy and defend the drip. The wicks to the top side are there, but it's obviously, you know, the wall of resistance will eventually break, because you can only poke up so many times, and whoever's trying to short us down, I mean, they eventually will run out of money, right? And it's retail, institute, everyone is trying to buy the dip. Whoever is professionally shorting, what happened in the last few bull runs, it was the professional shorters that got liquidated. And they were the ones who got margin called on. And they got completely hosed, okay? Because when this asset goes to all-time high price discovery, there is nothing that tells you it can't go to this number, that number, whatever. It's only us technical analysts that are like, okay, if I pull a fib of this consolidation, one-to-one target is this. So that's how you can get like, oh, 100,000 and whatnot. Let me just show you what the heck I'm talking about. So you're like, what am I saying? Ooh, I just noticed something very interesting here. I'm going to show you guys in a second. So something like this, if we are pulling up a consolidation and we're pulling up the low of Bitcoin over here, whoever bought at like, what is that, 20,000? Dang, is that 20,000? Or is that 29? Oh, wow. That is 20,000. Okay. Well, whoever bought at 20,000, golden pocket of this low on CME, they were gonna let go their trade until 40K hit and then around 50K. That was the one-to-one extension with the fib. Then comes the liquidity grab when you're looking for higher. So this fib is actually an old one, but I will follow up with this later when I reset this fib. But the point of the matter is, these color-coded fibs are not proper. They're supposed to be 3 colors per level. This is a very, very old chart, so I'll just give me the benefit of the doubt. There's too much data on this, because I did this maybe like, remember the exact top on perps? I will check that in a second, but I 3. You should be looking for 3 levels, and the next level is around 96 to 100K. So people saying 100K Bitcoin is possible this cycle it's 100% possible. It's in the charts. The Fib is already telling you the next extension up is going to be near that 100K, and then you got the next level after that, which is like 180, or I think it was something like that. So upside is legit and it's happening. Now I'm going to turn off all this doodle stuff. Okay, so I want you to see one thing. This was the previous high, and we are above the previous high. We have taken the liquidity and we're going down, right? Now let me show you perps. Perps, I don't think did it like that. Oh no, it did. Okay, maybe I was thinking about Ethereum. Okay, well that's basically what I'm saying is that the extension higher is much higher. Like that's why you don't want to short squeeze. Oops, wrong chart. That's why you don't want to short squeeze. You don't want to be caught in a short squeeze trying to short an asset that's going to price discovery because it's unlimited. The upside is unlimited. The downside is defined because it's zero or you're near support. But that's why it's like shorting. You have your potential gain. You know it. Longing, your potential gain is infinite. And the only reason I know this is because when I'm straddling and I'm doing options, you will see that in the premiums. So just be aware. Aside from that, now we can go to the lower time frame stuff. Am I on the right chart? And what I was trying to go about was on the weekly, we're doing this little consolidational thing, right? We don't know if we're going up or down. We're trying to hold ourselves up from the bottom, and this order block is protecting us, and we're trying to basically get the liquidity up top and break out, right? Ideally, you can see that we actually took all this liquidity over here on this last low, and now we did this beautiful buying wick, and then we quickly went to the upside, right? This right here looks like a bull flag consolidation because all we did was test this impulse candle and we did not break down. In my opinion, for the next 2 3 days or the weekend or whatever, I think we're gonna go take the liquidity up to the top before we even roll over. And what I'm looking at is I don't want to show you guys all this stuff, but I have this set up. This is what I'm looking at right now. Meaning, let's go to a lower time frame, 4 hour. Okay, this is what I have set up right now. Meaning, if we can't get above this 50, if we can't hold above 59K, we're not going to get to the next level of 64,000, which is basically on a 4 hour time frame. If you're trading, like you're pulling your information on a 4 hour scalp, you basically took the long off of 54K, your trade confirmed above 55K, and now you're looking for upward continuation above 58. This was your first TP, by the way. I don't know if you guys can see all this right here. TP1, if whoever longed 55K, their first take profit was around 59K, okay? So over here, you're getting this consolidation. If you look, see, you're getting this little consolidation, as well as on a 4 hour time frame, you try to dump below that level to try to get the longs out over here at 58,009. The thing is, we're holding nicely above this level, okay? And I'll go to an hourly just so you can see what's going on. And right now, if we hold above this 58, 59K level, the next local target on an hourly time frame, I would be looking for 60,700 to fight this order block. Once this order block is claimed, you already know on a 4 hour time frame, you're going over here to 64,400. It's only on hourly consolidational time frames like we're trying to see, and right now volume is actually breaking out, looking like it's about to go for that short squeeze. And what the short squeeze will do is anyone who is shorting, they're going to get liquidated, they're going to get stopped out above around 60,000, which is a psychological number that everyone is probably going for. So people who are trying to like short 60K, they are probably going to get destroyed because it'll probably overrun 60K. And the chart is already clearly telling you that right here is where the resistance will be. So for you to think harder than what the heck price is trying to tell you is just moronic. So here. So this is like where it's gonna try to go to regardless of what you care, say, or think. There's too much money here, there's too much money here. If you're not gonna go down in this descending, you go like that. If you're not going to go down anymore in this descending channel, then obviously the only path is up. The risk of everything for downside is right here at 58,800. Just mark it on your chart. If you're going underneath that level and you're long, consider taking a short hedge and closing the short hedge with a stop loss above this level. As we impulse up, your short will close out, your long will continue to print. You can re-short around 60,700. When I say short or take a hedge, I mean don't close your long. Instead of closing a long, open up a little bit of a short position to basically lock in the gains of your long so you can let the trade run and produce more gains. If you're taking profit and opening a short at that same point, you can also do that. But what you're doing is now you are booking profit and now you're locking in that short with the smaller position. It's basically you're putting yourself in a less profitable position for the upside to continue in a premature short. But I mean, if you're long from 55K and you're not taking a head short here at 59K, are you a trader? Because you sound like a dreamer and hoper or an investor thinking you're going to 100K tomorrow. I know we're going to 100K, I showed you it, but it's not happening tomorrow, guys. So be realistic as to your ranges and take profits and stuff for your asset. And yeah, I mean, this is all there is basically to discuss on Bitcoin. I see upside in the next 4 to 12 hours going to fight that liquidity that people think they're safe on their shorts from the New York session. And then if we can't get above to 64 by Sunday close, then that means that this is a level that we should be having to take a short because we couldn't close weekly CME. I mean, we couldn't close the weekly perp candle higher, and the next one can open and go wherever. But if it's this week that we can't even get to the TP2, that means TP1 can fail, and then the short over here, you know, on this like whatever the heck you want to call this consolidation, this like Quasimodo head and shoulder, whatever this is, whatever this is, that can play out to the downside to basically confirm the 4 hour trade one more time. And then if that happens on a daily, that will be like a double bottom W. Okay, so everything is doing what it's supposed to. You just need to be patient and mark your levels up properly for the areas of, you know, confluence, because this 59K, smart traders are probably taking like a short, a little bit of a short. Retail is long, and they're longing like apes right now. Okay, anyone who got liquidated is probably like rushing to their hardware wallet, pulling it out of their boy purse, and trying to transfer funds to the exchange immediately to get back into position. And that's like why we get these little weird consolidational things, because people rush back in. And then what does the market maker do? He's so excited and happy that there's OI back to flush. He flushes it again and again and again until people realize we're not going higher. So right now I'm in the short squeeze mindset, but we need to get above that 59K and stay above 59K. This $100, $200 consolidation above the level is like a telltale swing failure pattern, like SFP liquidity grab kind of situation. So what you would like to see on at least a 4 hour time frame is this 4 hour engulf this level here above 59.7, and then you can be like, all right, we're off. If you can't get the buyers to come and actually do it here, you're sending up a bear flag right here. This is like a dead cat bounce. We're going like, we impulse down, we're trying to come back, and we can't even break the 50%. Around 50%, we're finding all this resistance. Then if this thing rolls over, can we be surprised? So on a 4 hour time frame, just be aware that, yeah, maybe you get another 8 to 12 hours of lull, but the higher time frame path is still going for that upside. And today, and I think Sunday, I would be looking for upside before a rollover because I'm looking for 3 daily candles, like 3 soldiers. So today's daily close, I'm looking for green. Tomorrow's daily close, I'm looking for green. And then Sunday, after that happens, we'll have whatever we're going to have on the weekly open due to the fact that I think we're setting up a short squeeze in the sense that, like, the guy who bought, he's defending his own bags and he's trying to impulse for his own take profit. So if this guy took a trade, where's his take profit? That's where we need to like figure out. And then if he took it like this, like he didn't get it all the way down at 49, 48, maybe he bought it at like 54. If he took it like proper trade, like after that first candle, he waited for the next candle and he bought the test of support, and then now it's bull flagging, then he'd be looking for around 64K for taking profit in this bull flag fashion. It's only if we fail here at 59K does this downside little wiggle come in, and I'll show you exactly what I was trying to show everyone else. We're in a little consolidational. It does look like a little head and shoulder. If this triangle consolidation breaks under that 59K, I'm looking for us to go and test back into 42K. I don't care about all this middle bullshit no more. If you guys are gonna try to catch a wick here and there, go for it. It's totally up to you. I won't do anything other than around 48 to 42,000. I already have my fibs marked, this blue and this thing. I'll attempt it in this little order block here. This one is done and over for me. Now I'm going to go here. And that's only if we come to the downside. If we don't come to the downside and we hold 58 and we start climbing, I will start looking for the next dead cat area for me to long scalp in this triangle, and I will first take profit at 64,300, and then definitely at 68, 69, and then definitely at 71. Those three take profit should be instantly put into the order book with limits, because I don't know how fast the impulse will come or what will happen. You could be asleep and you could get one of these green dildos of God. I want to make sure my TPs hit. As soon as those TPs hit, it could be a fast hammer down of people shorting like apes. So just be aware that these things are like, you should just have it set. You shouldn't just wait. And that way you can have a stress-free trade if you're going to take this trade. And then you can see this candle here is got a lot of liquidity underneath it, underneath this level right here, 55K. But 55K right now, you should be treating it as a solid bottom support, 55K, until broken. Once it's broken, then we can start looking at the bottom of the wick around 48, and then we can look at 48 to 42 that I was talking about. This is all, gonna take time. If this rolls over, that's where we're going, guys. So just be ready. I'm just giving you guys that heads up if it rolls over. Any BS news, any nonsense. If the market wants to punish the Fed to cut rates because they think the data coming out gives Fed more time, well, the market will dump down to force the cut in a emergency cut situation for the Fed. And that's what we want to avoid, being caught in any kind of market games. So that's the gist that I had for Bitcoin. I'm going to quickly go over Ethereum without showing you guys too much. Um, Ethereum is weaker than Bitcoin. Did you just quickly see that flash? You see, we got higher lows and a decent bounce. ETH is still underneath this level. So and then look, we're in that order block that I'm looking for on Bitcoin and ETH. So I'm not really trading Bitcoin at all right now. I'm mainly focused on ETH because it's too easy, too much easier to trade ETH than the volatility of Bitcoin. Like this last 2 weeks was not easy if you guys were trading it because it was a big range, and it's I'm sure a lot of people got liquidated. And ETH, at least, is this whole week we were in this tiny range of, what is this range? High, low, $48. So this range was only $48 for the week. Is that even true? Look at it daily. This was $350 range on this one daily candle. Oh, that's why, because that was last week. That's why I was like, wait, why didn't it show up on this? Okay, so this last week was a $133 change and then a $49 change this week. So in a $49 change on this week, that's like nothing, right? This $49 range. I guess that's what I was saying. Yeah. So basically, much easier to trade, even on 100x, man. Not even. Let's be reasonable, okay? On a $100 range, 10x is safe. On a 40 $50 range, 20x is safe. And if you're using the leverage to your advantage on something that's around 2,600, right? $500 on 20x is $10,000. You're taking a 5 ETH position with a $500 account, and then if you're moving $50 on that 5 ETH, you're making almost half of your money back in that one $25 move. So that's why I'm like really, really hammering ETH hard. Same thing on ETH that happened on Bitcoin. This week, we didn't even go to 50% of it. We are just floating on up. And we are way weaker than Bitcoin. So the potential gain right now, in my opinion, is much, much better on ETH. And I am trading where I'm putting my money where my mouth is. I'm long on ETH right now, and I've been long and short, long and short, long and short. I've been consolidating this whole week. Okay, I just like full disclosure. This week, my PNL, cumulative PNL, was like 700% because I was just trading chop, 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 chop. Hold on, let me verify that. 739% was my PNL for this week, which is like insanity. Insanity. People are looking for 20% moves in the freaking year, and I made 739% in a week. And last week before that, it was like 1,500%. A couple weeks before that, it was like 3,000%. So it's not like, oh, this is like a one trick pony bullshit. No, I know exactly what I'm doing. I am just trading chop consolidation. I have no uh, I am not a guy who's like, oh, I'm gonna long and hold for whatever. No, I'm in and out. I don't even try to trade over the weekends. I probably end up doing it, but Monday through Friday, I have a very strict trading plan. I have time limits. I have setups. I have become much, much more robotic and emotionless with my trading. So I suggest everyone having a trading journal. I've backtracked all the dumb mistakes that I was doing for like a good year, and I've just stopped doing them, and that has greatly increased my P&L. I mean, I know everyone can make money in markets, but can you keep it? Can you hold it? Can you withdraw it? And can you not put it back into your account because you got liquidated on some stupid shit? That's the things you want to see. You want to see consistent withdrawals. You want to see consistency with your trading, like the asset you're trading, the time frame, and the setups. And what that means is not 10 different coins, 10 different things. Like no, 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 no. You're not trading, bro. You're not trading if you got like all this stuff going on at once. You need to have the same setups, same asset, same time frame. That's how you're going to repeat success long term. If you're doing stuff random, willy nilly, and you're getting lucky here and there, eventually that will die and dry out, man. And within 90 days, you're gonna find out the hard stuff. Within 90 days, if you did not lose 90% of your portfolio, you're doing good. Let's say that. Yeah. Other than that, guys, I mean, ETH, I think has much higher potential. If you guys want to see the quick chart that I can show you, I'll show you the CME. This right here, all this, don't you think deserves a test of filth? From 27.7 all the way to 29, about 3,000 is a possibility. That's $300 when I was just telling you about what could happen if you took a 5 ETH position, you went up $300. That's $1,500 you're gonna make on a $500 trade if you are doing your stuff properly. So the The potential is there, guys. The potential is there. CME and BTC already filled the gap, so I don't want you guys like, oh, Bitcoin's got a gap. No, we filled it and rejected, and we're trying to basically encompass it. ETH is the opportunity right now because that massive $200-300 gap, what is it, 2770? Yeah, $300 gap is still there, and it's waiting for a test, just begging. So this is what I'm aiming for on ETH. I hope this helps, guys. If you have any questions or concerns, leave it in the comment section below. If you would like to trade with me live or have any questions you want answered, feel free to join my Discord server. The link to the server is in the description of this video below, alongside all the other affiliate services that I use and recommend that helps the channel grow. Thank you guys so much. And then last but not least, please share this video with other like-minded individuals if you can. And the last thing I want to leave off before we get out of here is Dixie, Dixie, Dixie. Who in the world would have assumed that the US dollar would be playing these games with the global markets in this fashion? If this thing is going down, where is our inverse relationship? Bitcoin should be like all the way to the moon with ETH. So this delayed reaction of Dixie's inverse relationship with Bitcoin, I'm going to assume is due to the carry trade unwind globally, meaning JPY, yen, all those people around the in the other side of the world getting out of those carry trades. They're probably, doing what they can with whatever liquidity they have to basically close those trades, and that's affecting the US dollar because they probably are invested in the dollar after borrowing that other stuff for lower interest. And as they're getting their dollar back to pay off their trades to go back to their stuff, this is affecting it. And I guess that's why we're selling off some assets in crypto as well, because crypto is the highest liquidable asset. If you need money, it's the quickest and fastest thing to sell to get your cash. So some of that hypothesis makes sense, the thesis makes sense, but we won't know. We won't know because the US Treasury is doing stuff with their bonds as well, like the way that we're selling. So we won't know. We will find out next week. Before I get out of here, let me show you what I can. What are we looking for next week? Is this gonna let me? There you go. It's not letting me show you. There it is. So next week is the Fed calendar. August 23rd is the Jackson Hole meeting. This is going to be a big thing because Powell is gonna say stuff and the whole market is going to try to like digest. Are we going to get 2 rate cuts, 3 rate cuts, blah, 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 blah. Then after August 23rd, the monthly close is very important for the crypto world. We need to see, are we going to fill those CME gaps or are we going to reject? Okay. Over here on the monthlies. And then here's the monthly. Okay. Are we going to basically leave that gap and then just continue down? And then the last thing was after that, we're going to go right to the Fed decision for the rate cut, which is September 17th and 18th in the new month. So next September, these are the big things, the jobs report, the CPI report, the Fed decision. But this month, before the month is over, Jackson Hole meeting on the 23rd is very important. So just keep those dates in mind if you don't have them already booked, and maybe don't trade those days. Maybe just watch the market those days if you don't know what's going on, and be reactive, not front running. Be reactive to what the price action does. Don't try to predict and don't try to front run. That's where you probably are losing the money. Aside from that, guys, have a great day and talk to you soon. Be safe. Adios.